What is going on, everybody? It's Stas here. Welcome back to another video. So we got to break down my game plan for this week in the markets in this video. We'll break down the overall markets and see what's been going on. We'll do a quick little recap of what happened last week. And I want to break down 10 stocks in particular, all of which, except for one, are reporting earnings this week. So if you all find value, hit the like button, subscribe, and make sure to get your free money from Moomoo. You get one free share of NEO guaranteed and up to 5 other stocks, each of which could be valued up to $3,500. All you have to do is use my link down below and deposit at least $100, and boom, you get some free money. And with that being said, let's get right into the video. So as we can see here, based on the 4-hour chart, when it comes to SPY, which you guys should know at this point, tracks the S&P 500, we're noticing a breakout above the moving averages and the overall downtrend, or at least we're starting to break out of the overall downtrend from the past couple of months. And that really started to accelerate after the Fed meeting. Actually, it might have been the day before. I think it was the day before the Fed meeting. We started running, and we ran pretty much all of last week. We blew through those resistance levels. So at this point, we have two main levels coming up on SPY. One of them is at 447, 448, which was the high point in the middle of February, and the second level, key level here, guys, is 458 to 460. That's where we double topped in the middle of February, early middle of February. So if we break 447 this week, watch out for us to get some sort of blow off top rally, maybe to 455 to 458, 460. And quite honestly, if we do break out of 448 and we do fill that gap to 458, I mean, it's going to be very overbought in the short term, and at that point the markets are going to be screaming for a short-term little pullback, little healthy pullback. So I suspect if we break 448, maybe we plow through the 450s, and then we're going to cool off a bit. We might find support around 445, 448, and then we'll see what happens from there. So overall, markets are starting to break out. SPY is starting to look pretty decent here, guys, as we are getting a relief rally after the Fed meeting and after last week in general. Obviously, there was a lot of anticipation, building up for this Fed meeting. Pretty much everybody knew they were only going to do a 25 basis point hike. That was already priced in, but still, there's a lot of anticipation about it. Who knows if anything else will come out of it. That stuff always keeps the markets on their toes. So let's look at Triple Q. Same thing. Triple Q's breaking out. We took out the moving averages last week. We're now taking out the highs from the beginning of March, end of February as well, being around 350. Triple Q closed Friday at about 351.50, and it ran all the way to 352.50, an extra $1 in the aftermarket hours. So this is clearly breaking out like SPY, like I said, guys. And at this point in time, next resistance is right around 356. That was the high from the middle of February. If that point breaks, this could be smooth sailing to about 365, 370. That's where it really could start going. So watch out for it, guys. Watch out for it. If we do start breaking mid 350s on Triple Q, an extended relief rally could be right around the corner, technically speaking, right? Of course, if anything crazy happens with Russia, Ukraine, all this could be out the window. But as of now, that's kind of what I'm thinking. And as always, I'd love to know your thoughts. Drop me a comment down below. And if you haven't done so already, make sure to smash that like button and subscribe and turn on that notification bell so you don't miss any of the videos, the updates here that I'm doing on YouTube that I post pretty much every single day. And if you guys aren't following me on Twitter, Instagram, TikTok, I mean, I'm on TikTok and I'm all over the place. If you guys aren't following me there, make sure to follow me at StasSurfS on all platforms, at StasSurfS. So let's talk about some of these stocks. We have a lot of companies this week, big companies, reporting earnings. Number one is Nike, ticker symbol NKE. Let's pop it up and see what's going on. Nike, like the markets, has been rallying sharply the past couple of days, and we all know individual stocks, some rally harder than others, and a lot of the individual stocks rally harder than the index. That's why we've seen SPY go up 6-7% in the past couple of days, but Nike, on the other hand, has gone up double that, about 13% over the past couple of days. So Nike got very beaten down. It hit $179 back in November. It went all the way to 116. I think that was last week. Yeah, about early last week. So it was down 35%, well into a bear market. and it had a crazy snapback rally like I showed you guys. Now we're back over the 50 SMA, and we're about to test the 180 SMA, most likely this week. The 180 SMA being around 137.50 a share, and right now we're trading at 131. So we have earnings coming up on the 21st, which is on Monday, right? Which is tomorrow, the day after you're watching this video, and I believe they are after market hours. So Nike, the stock is, I mean, it's not like one of these crazy volatile stocks, but it's been swinging lately. You know, this thing went from 175 to 145 to 180 and 116. Now we're pushing 130. If they report good numbers, you know, if the sales abroad are looking strong, you know, guidance is good, this might rip, you know, especially if the overall markets start recovering or you know, extend the relief rally that they've been seeing. The S&P, the Dow, the Nasdaq, Russell, right? You know, Nike's going to do pretty well probably in the short term, and we might even break out 137, break out of that 180 moving average. And let me show you this 3-year chart. The 3-year chart on Nike looks pretty decent. It's still holding the main moving average, which is right around 113, 115 bucks. Again, we bounced at 116 a couple of days ago, so that's a good sign that we're holding the longer term support levels in terms of the bigger charts, so, or larger time frames. So that's good. Nike looks pretty decent. Let's see if it could continue this rally on top of maybe good earnings coming out. And if earnings are horrible, then you guys know what probably will happen after that. So keep your eyes on NKE. We also have PDD reporting this week. This is a Chinese company, which you guys remember what we got last week. We got some great news for the Chinese stocks. China wants to ease up on the crackdowns. They want, you know, IPOs to be able to happen. You know, they want you know, pretty much they want to ease up a little bit, right? Which is good, because the whole narrative has been, you know, we're super hard on the Chinese stocks, this, that, the third, regulation, delisting. Now we're finally getting a breather, a relief rally. And PDD went up a lot, 23 bucks to about 43 in just a couple of days. So it essentially doubled in just a couple of days ahead of earnings, which are coming out on Tuesday, the 22nd. So we have earnings coming out on Tuesday. The stock has doubled pretty much in a couple of days. And on Friday alone, it went up over 8%. And we're also noticing an inverse head and shoulders. We're above the 50 SMA, but not quite yet above the 180 SMA. So this is pretty textbook here, guys. Look at this. Left shoulder, we got the head right here, and then we got the right shoulder right here. Textbook inverse head and shoulders. If this completes, we might be breaking out of 50 bucks, no problem, which is the, again, the 180 SMA here. We might take that out and start pushing 60s. I mean, okay, I don't want to start acting like it's going to go to 100, 120 a share, but based on this chart pattern, 55 to 60, let's put it in that broad range, because nobody knows exactly. I'm not saying, oh, it's going to go to $57, 58. It could go anywhere from 55, 60, in my opinion, you know, if this plays out. And if we take out this 180 moving average, which I'm going to set my alert right there right now. And of course, a lot of this depends on earnings. If they do poorly when it comes to earnings, the stock's not going to do what I'm saying. But if they crush earnings, guidance is good, yada, 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 there's a chance that this rally could continue. And you guys have to realize these Chinese stocks, they've been butchered. They're down, a lot of them 60, 70, 80%. If they're rallying 10, 20%, at the end of the day, that is not much in terms of the, you know, the grand scheme of things here, considering they've gone down so much. If we get an extended relief rally on these the easing of China, the crackdowns, regulation, delisting, all that, if this kind of sentiment continues, these Chinese stocks could rip even more, because they're still, what I'm trying to say is they're still undervalued, even though they've ran up so much recently. And, you know, I would say that, I don't want to say each Chinese stock is still undervalued, but for the big boys, you know, Baba, Tencent, a lot of those, maybe even PDD, I have to look more into the financials, but a lot of these are still trading at, let's just say, cheaper prices, even if they've run up a lot off the lows. Again, PDD being up about 100%, which is nuts. So watch that one ahead of earnings. Another one, another Chinese stock is Tencent. What's the ticker on this? TCEHY. I always mess this one up, guys. I'm sure you do as well. Tencent's another one. Look at this. This was 37 bucks last week. We got the China news. It's now up almost 40% off those lows. So Tencent reports earnings on, let's see here, the 23rd. So what is that, on Wednesday? And I believe PDD's on Monday. So on Monday we have Nike, PDD. Wednesday we have Tencent. So look at this. Violent recovery. Nice sharp move after being completely just bludgeoned from the middle of February to about the middle of March. It lost about 35%, 40%, so deep into bear market territory. And that's on top of being down a lot even before that. So like I said, a lot of these Chinese stocks, they were getting hit aggressively before February, March. Then they got hit even more February, March, and now we're getting a relief rally. So we're still down a lot. A lot of these are still undervalued in my opinion, Tencent being one of them. So this went up 6.5% on Friday and now closed above the 50 moving average and is testing that high point from when it ran up that crazy day, and that's at about 52 bucks, 52.50. So if Tencent breaks that, mid-50s, right around the corner. So watch out for that. Adobe is another one, which I made a video yesterday talking more about Adobe. Go check that out if you haven't done so already. I talked about 2 other growth stocks that I'm looking to buy right now. Adobe's one of them. You know, if this starts falling a bit more, I'm looking to buy it. I'm very excited about it. They report earnings on the 22nd of March, which is on Tuesday. This stock went up 2% on Friday, and just like the other stocks in the markets, most of them, this one's been rallying aggressively off their recent lows. It hit 407, now it's in the mid 400s. It's up about 12% over the past couple of days. It closed above the 50 moving average, but it's not yet quite yet above the 180 moving average, which is right around 480. And although I might not want to buy long-term shares at about 500 a share, but if it breaks out and we start going to 500, would I trade the stock? Absolutely, which is why I think, in my personal opinion, and I could be wrong, it might not be for everybody, but for me, I think everybody should understand. Well, I don't think everybody should, because at the end of the day, there's going to be passive investors. There's going to be people that don't want to be trading or paying attention to charts. But if you're into the stock market, I mean, if you want to be more active, I think it's smart to be able to trade as well as obviously put money away for the long term. And, you know, index funds, blue chip stocks that you like. I do both, because although I wouldn't want to buy, again, Adobe at 500 as a long-term investment, so I wouldn't be putting long-term money in it, I would trade it. So I could do, it's kind of like the best of both worlds, right? And it's not for everybody. Again, if you want to be more of a passive investor, by all means, do that. That's great. You know, you're going to make money long-term. I think everybody should be a passive investor. But if you want to be more active, again, you can do both. Long-term and trading, right? That's what a lot of people do. So look at Adobe, ADB, the long-term chart. We covered that in my video yesterday. Go check it out for more detail. The long-term chart looks good. We'll leave it at that. CCL is another one. CCL reports on the 22nd, which is on Tuesday, guys. This stock has been hit very hard. And just from the middle of February to the middle of March, it lost about $10 a share. You heard that right, guys. $10 a share, or about 35%, which is nuts. And that has a lot to do with Russia, Ukraine, and really, it's not really Russia, Ukraine, but it's the oil market, right? Which kind of now recently got triggered again by Russia, Ukraine, which, I mean, that's kind of an excuse if you guys really know and been following things. Oil, I thought it was going to go up before Russia-Ukraine even happened, but that just made it go up even more, right? That's what I'm trying to say here, and that really hurt CCL and the airlines, because they are a big consumer of what? Of oil. So, yeah, you know, that's kind of what's hurting this company and the airlines are actually bouncing back. Same with CCL. Now it's up about $5 a share from that low, up almost 30%, which is nuts. So let's watch and see if this continues. I'll put an alert right at $20 a share, which is right by the 180 moving average. If that breaks, boom, we might be going higher. And let's look at these airlines. A lot of these are up a lot. UAL's up about 37% off the recent lows, now trying to break out of this moving average. Like CCL, LUV is up a whopping 20%. We have some other ones here. What are some other ones? I'm blanking out, guys. AAL is up a whopping, I don't know why I keep saying whopping. This is up 32%. We have DAL up, let's see, probably up even more. DAL is up 25%. So it looks like the one that's up the most is UAL, which is insane. This one is up 37%. Holy crap. So watch out for the airlines. Watch out for, again, the cruise lines. Another one that I'm looking at is NEO, ticker symbol NIO. NEO reports earnings this week. The stock's up 60. Get ready for this, guys. 67%. I mean, I can't even say that without laughing. The stock's up 70% over the past couple of days, which is just ridiculous. This is another one that has Chinese exposure because it's a Chinese company, guys. It's located in China. So it ran up a lot that one day, and it's just been ripping ever since. I mean, on Friday alone, it went up 11%. So it went from $13. Now it's above $20 a share, almost 21 bucks a share. And the crazy thing is you can actually get a free share of NEO. If you use my Moomoo link down below and deposit at least 100 bucks, you get a free share of NEO guaranteed, which again now is 21 bucks a share. And you get up to 5 other stocks, each of which could be valued up to 3,500 bucks. It's free money, guys. Again, use that Moomoo link. Get your free share of NEO. And now let's keep talking about NEO. So overall, this has rallied 70%, but it's still in a downtrend. That's what you guys have to realize with a lot of these stocks. You're noticing that in these charts. It's still in a downtrend, but if we continue to see that push in Chinese stocks, which I think could happen. I don't think that relief rally is done quite yet. I mean, it could be, but I don't think it is quite yet. I could be wrong, but I don't think it is quite yet. We might start breaking towards the mid-20s because at this point, I think NEO, I don't think it's worth 13 a share. I'm not saying it's undervalued, insanely undervalued here, but I think a lot of the, let's just say this, I think the bubble has popped. You know, I think it was very overvalued a couple of months ago, close to a year ago. Let's see where it was. Yeah, 67 bucks. That was about a year ago. Very overvalued, but it went from 67 to about 13. It dropped 82%. The bubble popped. The bubble popped. And now I just think it's at a much more reasonable price. So we'll see if it continues this rally moving forward, again with earnings coming up on the 24th. So we have Colgate Palmolive this week as well. CL, the stock went down 4% on Friday. It's currently down 15% from the recent $85 high, and this is clearly in a downtrend. We're seeing a death cross under the moving averages. Guys, this stock is not reversing, or at least is not reversing yet. No signs of it. In fact, we took the lows out, the lows that were hit from, when was this? We were hitting low after low after low in September, October, and we just took those lows out, which is not good. And let's see the longer-term chart here. And did I mention they have earnings this week, but I don't know what day. And for some reason, ThinkOrSwim is not telling me here what day they report earnings, but I'm pretty freaking positive they report earnings this week. So keep your eyes on this company. The longer-term chart does not look that great either. I'm seeing a clear... Look at this. Have you ever seen a triple top, guys? If you haven't, this is a triple top. Look at that. That is a clear-cut triple top, and we're also taking out the moving averages and now trading at an almost 2-year low. That is not good, guys. The last time Colgate was here was back in the midst of the pandemic. You know, June 2020, May 2020. Not good. Not good at all. And by not good, you know, I'm not saying it's a crappy investment. I'm just saying from a technical perspective, from a trading perspective, it doesn't look that good. But of course, if you're looking at it from a long-term perspective, the cheaper it gets, the better. That's if you believe in Colgate. So let me just clear that up, because if you guys are new to the channel, you might get confused like, oh, is he saying Colgate's a crappy company? I'm not saying that. I'm just saying, again, the chart does not look good. But from a long-term investing perspective, again, stocks in general, you want to buy them at a cheaper price, right? It makes sense. So that's Colgate. We also have EVGO this week. This chart's looking pretty good if you ask me, guys. We have an inverse head and shoulders forming. That's the first thing that I'm seeing. If we zoom in a bit, we can draw it out. We have the left shoulder right here. We got the head right around here if it wants to work. Oop. it just took me back. Anyway, you guys see that? We have the left shoulder, and then we have the right shoulder. I kind of butchered that, but that's what I'm seeing right off the bat. And another thing I'm noticing is it's been breaking out of the moving averages, and we got a golden cross about a couple of weeks ago. So this looks pretty promising, you know, for the trend to continue. We have earnings coming up on the 23rd, which is what, on Wednesday. So watch out for EVGO to continue this and maybe ultimately get up 15, 20 a share. You know, that might be a bit lofty, but based on this chart, that is where the right shoulder could complete. So that's EVGO. Another one that I want to talk about is Dri Darden Restaurants. They own a lot of restaurants that you probably have been to. Well, I'm going to say you've definitely been to, and I definitely have been to as well. And I just pulled them up right here. I'm not sure if you guys can even see this. Let me see if you can see this. These are their brands. You guys see Olive Garden, Cheddar's, Longhorn Steakhouse. You have Yard House, Capitol Grill, Bahama Breeze, Sesame 52, or not Sesame. Is that Seasons? Yeah, it's Seasons, right? Yeah, Seasons 52. I said Sesame. Oh my God. And they have Eddie V's, which to be honest, I have never heard of Eddie V's, but it says here Prime Seafood. They probably have pretty decent seafood. So they have a lot of well-established brands, and I want to see how these companies, well, I guess it's one big company, Darden Restaurants, but I look at them as little individual companies. We have, you know, Olive Garden, Yard House, Capitol Grill. I want to see how these have been doing the past quarter. As the stock's been obviously obliterated, it went from 165 to 116, and it lost about 30% of its value. So let's see. We're trying to make a move. The stock went up 2.5% on Friday. It's breaking out of the 50, but not quite yet out of the 180 moving average. So let's see, guys. I'm going to put my alert at $140 and watch what it does from that point. And the last stock for this video, which is the company that's not reporting earnings for this week, is Costco, ticker symbol COST. And not to say I told you so, but did I not tell you so? Did we not call it out on the channel that Costco was going to break out of this wedge? And if it, well, I don't want to say that I said it was definitely going to break out of the wedge, but I said if it did break out of the wedge and the moving averages, it was going to have a shot at breaking out to all-time highs, and that's what's going on. We broke out, and I also mentioned if we break 535, that was a couple maybe about a week ago, it was going to take off. And look what happened this week, guys. It took off after the Fed meeting, right around the Fed meeting, and broke 535, and now we're at 560. Just like that, we're about $10 off these all-time highs. So I think if the markets continue, markets green, you know, maybe Monday, Tuesday, we might get Costco all-time highs, just like that. Don't be surprised if that happens. So that's pretty much it. We'll wrap it up here. Hope you all enjoyed the video. If you did, hit the like button, subscribe, drop me a comment, and join my Patreon if you want all my real-time buys, sells, call-outs, morning update videos, plus more. That's linked down below, or you guys can go to StasSurFest.com/Patreon, and don't forget to also get your free share of NEO. You get 1 free share of NEO guaranteed, and up to 5 other stocks, each of which could be valid up to $3,500. Use my link for Moomoo down below and deposit at least $100, and boom, you get your free money. And with that being said, I'll catch you all in the next video. Thanks for watching. As always, peace out.